All right, I want to bring in Paul Schatz now, President and CIO at Heritage Capital. And Paul, before we dive in here to the Fed and the statement today, I just want to take a look at the markets because we're on track for our biggest rally in 6 months, biggest post-election rally in history. Each of the major indexes now up better than 2%. Do you think the Fed is breathing a sigh of relief here because the market is doing so well that perhaps they don't need to take immediate action?
There is no doubt Jay Powell and his friends are going phew, because their big concern was if the worst case scenario was going to come true, which nothing pointed in that direction, but if it was going to come true, they're worried what would they pull out of their toolbox, not for the next 3, 6, or 12 months, but the next 3, 6, or 12 days to literally flood the system with money to keep the credit markets moving. So yes, they are breathing a sigh of relief. They can now focus on pointing at the lame duck Congress and telling them, hey, we need more stimulus and you can't rely on us to do that. I think that's probably the worst kept secret in the US right now.
So Paul, for an average investor, there are members of the FOMC and the Board of Governors. You've got Loretta Mester and Kaplan and George, who are worried about the low interest rate environment, possibly creating a bubble. They don't use the word bubble, but they are. They're worried about financial stability. And if you're an investor, shouldn't you be worried about that? Or is this don't fight the Fed and go for the next 2 years?
Yes to both. So it depends on what lens you're looking at, Adam. If you want to go long term, you want to go the next 10 years, of course, you should worry about asset prices being inflated. But if you're looking at the next 10 weeks or 10 months or beyond that, no. The Fed is full bore, full steam ahead. COVID numbers are spiking. The jobs market is not going to improve without a massive stimulus part, whatever are we on. So they can jawbone all they want about asset prices, but frankly, the markets right now, forget about the NASDAQ, but the market, the broad markets, where the Russell, the mids, the Dow, the S&P are on single digits either side of even on the year. So no, I'm not worried about that right now. That's a topic for way down the road. In the here and now is we've got not businesses with 500 people, my dry cleaner, the bar down the street. We have little businesses that are teetering, and as the weather gets cold, Fed's got to figure out how to work with Congress and save those people and not worry about wasting money on airlines.
30 seconds or less, Paul. For investors, is it more important who heads the Federal Reserve than who's in the White House?
I would say it's more important, neither of the above. It's more important that the American people spoke and government is divided and gridlocked. That's the best scenario for the Fed, the White House, Congress, and especially Main Street and investors.
All right, Paul Schatz of Heritage Capital, thanks for being with us.
Thank you.